Part 4: The Architecture of Reform. Chapter 8: Rebuilding the Moral Economy, Restoring Fairness and Trust Through Policy. 1. The price of fairness. Every nation has two economies, the official one measured in GDP, and the moral one measured in trust. When the moral economy breaks, numbers rise but lives don't. People sense the imbalance even when the indicators say growth. The result is quiet rebellion, withdrawal, resentment, apathy. A moral economy isn't about charity, it's about designing exchange so that decency pays. It asks the same question Adam Smith asked before capitalism existed: how do self-interest and conscience coexist? 2. The myth of the invisible hand. Classical economics assumes markets regulate themselves through competition. But markets, like governments, inherit the ethics of their architecture. When tax loopholes reward evasion, when wages stagnate while profits soar, when speculation earns more than service, immorality becomes efficiency. A 2023 IMF report estimated global tax avoidance at $600 billion annually. Every dollar hidden is a dollar stolen from the commons, schools, hospitals, research. Yet most of it is legal. Law, stripped of morality, sanctions theft by sophistication. 3. The Social Contract 2.0. The philosopher John Locke argued that people consent to government in exchange for protection of rights and property. In modern economies, that protection must include dignity. Citizens tolerate inequality only when they perceive fairness, when the game looks honest even if the outcomes differ. Rebuilding the moral economy means restoring reciprocity. Those who benefit most contribute most, those who struggle most receive support to rejoin the circle. 4. A progressive simplicity. Complexity is the oxygen of corruption. Tax codes hundreds of pages long conceal benefits for the best advised. Ethical policy means progressive simplicity, clear brackets, minimal loopholes, transparent public reports of effective rates. Norway and Sweden publish every citizen's income and tax paid. The result: high compliance and low resentment. Transparency shrinks cynicism faster than rhetoric. 5. The dignity wage. A moral economy cannot outsource subsistence to luck. Wages must sustain life, not merely survival. The concept of a dignity wage, higher than minimum, tied to local cost of living, anchors fairness in policy. When work reliably leads to security, cynicism recedes, citizens no longer view welfare or wealth with contempt. The 2019 OECD comparison of nations with living wage standards showed lower mental health costs and higher civic trust. Dignity pays dividends. 6. Public investment as moral signal. Budgets are moral documents. Every dollar spent says what a society values. When governments invest in education, green infrastructure, and research, they broadcast optimism. When they subsidize pollution or speculation, they preach despair. Harvard's Edward Glaser calls this moral signaling through spending. The signal matters because citizens imitate it. When the state models responsibility, the market tends to follow. 7. Ethical capital. Markets can be moral laboratories if rules reward virtue. Social impact bonds tie investor profit to measurable social outcomes. Green finance links credit access to sustainability. Public benefit corporations bake social purpose into their charters. These instruments convert ethics from cost to asset. The World Economic Forum estimates that ESG-focused funds will exceed $40 trillion globally by 2030, evidence that morality, correctly priced, outperforms cynicism. 8. The Fair Tax Compact. Reformers propose a Fair Tax Compact, a global agreement to standardize corporate minimum taxes, curb secrecy jurisdictions, and automate information exchange. OECD's 2021 framework, 15% minimum, is a first draft. Expanding it would reclaim hundreds of billions yearly for climate action and education, the two investments that multiply fairness. When taxes stop being punishment and start being participation, compliance becomes pride. 9. The wealth of the commons. Modern economies undervalue what can't be privatized: clean air, community health, digital data. A moral economy reclassifies these as public wealth, assets to be managed for collective benefit. The economist Mariana Mazzucato calls this the entrepreneurial state, one that co-creates value and demands fair return. When public research spawns private profit, royalties should flow back to the commons that funded discovery. 10. The reciprocity principle. Every policy can be tested by a simple ethic. Does it strengthen or weaken mutual obligation? A subsidy that entrenches monopoly fails. A tax credit that empowers small enterprise passes. A welfare program that humiliates recipients fails. One that rebuilds self-reliance passes. Reciprocity transforms redistribution from guilt to grace, giving back what was built together. 11. Re-embedding finance in society. Finance was invented to serve production, not the reverse. Ethical reform means reinstating transaction taxes to curb speculation, public banks to fund long-term projects, and credit unions that keep profit local. The evidence is plain: regions with community banking models exhibit higher SME survival and lower default rates. Finance regains its moral legitimacy when it functions as plumbing, not casino. 12. Measuring moral prosperity. GDP counts everything except meaning. Ethical infrastructure needs new metrics. Trust index, citizen confidence in institutions. Fairness ratio, CEO to worker pay gaps, tax equity. Sustainability score, environmental debt relative to growth. Learning dividend, public investment in education per capita. These indicators turn moral progress into measurable progress, the precondition for policy accountability. 13. The psychology of fair exchange. Humans evolved to trade under the rule of fairness. Neuroscience shows that unfair offers activate pain centers in the brain, cooperation triggers reward circuits. Economies that feel unjust literally stress the collective nervous system. When policy aligns with fairness, societies experience what behavioral economists call the trust dividend: higher cooperation, lower enforcement cost, longer planning horizons. Justice, it turns out, is a stimulant. 14. The public dividend of knowledge. Education is the most regenerative moral investment. Every dollar spent on learning multiplies autonomy, innovation, and trust. Open education platforms and lifelong learning credits could operate as national dividends, returns on public integrity. Knowledge democratizes advantage, ignorance concentrates it. The moral economy rests on the circulation of understanding. 15. Closing reflection. Rebuilding the moral economy isn't about taming greed, it's about reprogramming reward. The market will always chase profit. The state's task is to ensure that virtue and profit run in parallel. Fairness must be designed into every transaction the way gravity is designed into every step, unseen but unavoidable. When economic systems make honesty lucrative and empathy efficient, morality will no longer rely on sermons. It will be the logic of prosperity itself. End of Chapter 8. Rebuilding the moral economy, restoring fairness and trust through policy. That chapter brought the focus back to individuals, how ordinary people, voters, professionals, and creators sustain integrity in daily life and rebuild civic trust from the ground up. This next chapter brings the lens all the way back to us, the citizen, the worker, the voter, the parent, the friend. It's the human counterbalance to all the systemic analysis before it, the reminder that reform begins with everyday choices that echo upward. Part 5. The renewal of character. Chapter 9. The moral citizen: ethics as everyday practice. 1. The mirror turns inward. After every scandal, we ask, how could they? But the deeper question is, how do we? How do we live with small contradictions, buying from companies we distrust, scrolling through outrage we despise, voting for parties we know will disappoint? Ethical failure in leadership often mirrors collective fatigue. The governed set the tone as much as the governors. Institutions reflect not only laws but habits, the daily moral microclimate created by millions of private choices. The moral citizen begins where cynicism ends, by refusing to outsource conscience. 2. Everyday integrity. Integrity isn't an event, it's maintenance. It shows up in small acts of consistency.